Hey, this is Alan Palmer. NASDAQ, where you get the best dope on the markets. We are going to talk crude here. So we have some news. Today is Sunday, April, what is it, 12th, 13th? I think the 13th. And Trump has shut the Straits of Hormuz. Okay? So one thing off the fly. So the missus said, she go, what are you going to do? And I'm like, well, okay. How about Brent crude goes, it already is under WTI, but how about it goes a lot under? And the risk is Brent crude is not efficient, and you can't get the crude, and you got 2 million barrel container ships coming to the United States, racing to the United States. Trump has all the oil. Game, set, match. So let's look here. Another thing here. Okay, so if these guys are coming in, and we're just talking. Okay, and we have a $7 spread. This is the June. This closed at 89.11. Yeah, see, you know what? I have that over there in that tab. Oh, I got it. Okay, and this is the May that, okay, we went off at 95.60. That's $1 under where we closed, okay? So the net change will be off of 96.60. Here, you can see here some head and shoulders here. Here you got a little trend line that they took out late in the day. Came back to this gap over here, okay? This is crude oil. I think, listen, let them open the crude $10 higher. I think you sell it. Look to sell it, okay? And in the overnight, if you get that spot, all of a sudden we're hanging up there for, 2 hours, and you decide you want to sell it, put a little bit, maybe more than a new high stop, and then put a stop in, go to sleep, and, maybe you wake up and we're $10 lower. Maybe you get stopped out, but, unless you're going to sit up all night, that's one way to possibly approach it. All right, this is the heating oil page. Right here in the bottom middle, June heat, okay? June heat. Trump is putting some heat on Iran here. This is a major olive line sell here. Right here, we got it. Look at this. We did close up there. Okay? You get back under, and it's a whole different thing. Here you go from the olive to the green here. Your olive sell, okay? Look at that. 2 of them. And they reversed, okay? And then here you stop everybody out. They sell it back down to the olive. Here you get over it. They sell it back down to the olive. This one, I don't know, babe. This is hard. Okay? We did, you know what? Ignore this little set of olives here. As a matter of fact, let me take that off here. Okay? And then this is where we are. So we made a new low close here for a couple weeks. Okay? We came up from over here. $2. We went up to 4. Okay? So I think sheiks that have had their network double, okay, just think about it. You got to hold that crude oil over there, and we just went from 55 to 110, okay? And so over here, here's November here. Actually, let's go in order here. This is May, so this is the spot here. 403 was the high here. See over here, we're at 355. Okay, I don't even know where, if I have long-term things here. Here's the July here. Okay, a thin olive, thick olive on top of a green, orange, thin olive, thick olive. Okay, right here. Okay, here the same thing. You close a new high close. Okay, but when you get back under here, look at this. You gap down, lower high, lower high. You got those X's there to sell it against. And here we're right here. It's going to be real interesting here tonight. All right. Let's go to, this is the crude oil. Let's go to RBOB here. Okay. This is June RBOB. This is unleaded gas here. Here you can see a green. There's an orange. Okay, we got a couple levels up above here. Here, look at this. On this gap here, it held. Okay. Watch this area right here. This is June RBOB. This is 281, and I don't know. What do we got there? 279 and a 40, 279.40. So less than 2 cents. You get under here, I don't know, look out. It is a gap, okay? It is a gap here, but here's natural gas, okay? Here's natural gas. Here's Nove natural gas here. Look at 350 is the price, and here is March at 330, okay? So it's under, the spot is under the back months. That's August 317. Actually, that's cheaper yet. Oh, this is March. And here's DSAR, Bob, here, 230. So this is unleaded gas in December, 230. Okay, let's go back and look at that just for, okay, so this is where we were for the last year, okay? This is where we were for last year. Here, this is an expiration here, and then we start with the new contract. These are olive line. Oh, you know what? Those might be stale. So, and here's where we are. We got a red over here. Here we got a green above here. We'll see here. Here you got a big reversal down. Here you got a big reversal down. Here you got one of these. This must have been March 9th. Yeah. Oh, so here on March 9th in RBOB, we actually traded lower. Okay. We actually traded lower. Because why? Because this doesn't affect us. Okay. And then look at this. Actually, look at this. So this was the first opening, and here we are. We're barely above it. That's in RBOB, okay? Because we're on drill, baby, drill. This is the golden age. All right, let's just glance here. This is June crude. Okay, so we're getting ready. Everybody's getting ready to roll the May into the June, okay? Roll it, whatever they got in the May. If they're long the May, they're going to sell the May, buy the June, okay? So this is what we got right here. I think this is all. Oh, okay. So this is a major olive line here. We did trade. Oh, that looks, boy, this is thin. You know what? This is thin. Goodness gracious. And this is May crude. There's the 117.35 here. If you've been watching these videos, it was 117.15 on the other one. Okay. Here's the little one. This was on March 9th over here. Okay. And then we broke, what did we break that day? 113 to 80. $34 range. My goodness, that is like silver. So, and then here's May. Oh, here's the other one here, 117.15. It's like a rounding error. All right, let's just give a glance here. This is the closes. Okay, so we have May 97.87. Well, okay. So since they trade till 4 p.m., the futures markets close at the crude closes at, man, I think it's 1:30. Okay, so anything like if we break down $2, okay, and you sell it right at the end of the day, you will have to margin the $2, okay, just to get to even. Okay, just so you understand that. So here you got the front month down $1.97 here. Okay. This looks like a little silly here. Okay, never mind. But these are where the prices are. All right. Okay, we're going to end this here, but let's look at the Chinese yuan. And here we are here making new lows here. Just in this. Well, actually, look at this. Hang on a second here. What is this, a monthly? Okay, well, in any event, we're making new lows. Hang on. Let's go to a weekly. Okay. There's a weekly here. This is the Chinese. Okay, so they want to devalue their currency. Okay, meaning it goes down here. So we will see here. This is going to be this will be an interesting market also to watch because Trump's got China by the balls. He does. He's got all the cards. China has no energy. Okay, now, is it dangerous? Could be. Absolutely. Risk is high. So if you're trading, I think you have to use a stop. Because just say, for example, you're willing to lose $1. All of a sudden, you get a $3 break. Okay? And then you don't get a rally because everybody's stuck and the algos are just pressing on the sell side. Okay? So it takes you out of your game. So I say you have to use a risk stop. This is gold yen. Gold yen. This there. Okay? So we're going to call this a wrap. If you need something, email me, ARP@NASDOG. Thanks for watching. Have a lovely day. Always use a risk stop to stop the risk.